Well, hello and welcome to our session here we've arranged for this evening or an afternoon for myself, and hopefully you will enjoy the content. I hope to address quite a few points that have been raised in the session in our live chat in the trading view. So let me share the screen first of all. Okay, so using the chat in my chat room on the trading view, can you or anybody confirm that you can see my screen and the sound is good? Could you help me out with that? Anybody? Can you see the screen? If we get that sorted, then I can proceed on to the material that I have planned for this evening. Those of you who have interacted with me in the trading view, you know that I have a chat room, and perhaps you can interact with me. Let me know if the sound is good and you can see my screen. Okay. Okay, thank you for that. So let me commence now. I will just make sure I have the right window open. I'm not sure why this is stuck. Let me just get that one sorted again. Okay, great, fine. I will hopefully try and glance at this one. I think the other one was frozen, so I'll try and glance at that one to ensure that I don't lose any of you. Okay, so let me begin first of all. And what I hope to cover is the content here, just an outline really. I don't profess to be an expert or an authority on all of this content. Some of you will have a more intimate and more detailed knowledge on some of these aspects. So I will only make a cursory glance or just pose questions and maybe points to consider. So first of all, one of the main comments that I'm keep getting from many of our colleagues in the trading view is, one aspect of it is trading technical analysis doesn't work for Bitcoin. And the reason for this, they think, is that Bitcoin is so unique. There's nothing like it. It's never been invented. And that it has such an ecosystem which supports its bullishness and almost perpetual bullish, higher highs and higher lows likely to continue. Many technical analysts have posted kind of a charts which suggests that there is exponential growth, and this exponential growth is supported by what they call this ecosystem. all the positive news and the fundamentals and etc. Uh, seem to suggest that the Bitcoin is so unique and that technical analysis does not work. Also, the very fact that we've had in early price history of Bitcoin in early 2010, and certainly 2011 and 12 and 13, where price have literally gone up parabolic. So during that time, they felt that the only thing that drove the price was the ecosystem, fundamental, no technical analysis. So I don't necessarily intend to convince any of you that that the technical analysis really work, but it's something you are invited to at least consider. And then if you feel that really this is not relevant, then by all means dismiss it. So let me just take you to a couple of charts before we go on to the other points, to just address the fact that technical analysis could work and why it might work, more to the point. Okay, so one of the charts that I have to show you is this chart of an apple. It's a, as you can see, it's a monthly chart, and if you look at the scale, it's an arithmetic scale. And because you're looking at this chart that looks very, very much, not exactly the same, but very, very much like the Bitcoin. You start off with a sort of almost like a flat line, and this is very deceptive because the area in here is really not flat line. You can see the lowest low here was 0.4, and then within this range we went to 4. So it's like 10 times 10 multiple in this area here is 10 multiple of where the price started off. So if you were to go back and look at that, that will be just like parabolic like that. And unfortunately, I can't show you the exact kind of a look as to how it might have looked at the time. But if you were there and say, for example, you expand this, you can just about get an idea. Look, what appeared to be flat line now is no longer flat line. Okay, we were saying from here, which was that, and it's even at 0.25 in fact, not 0.4 or 0.25 of a dollar, and from there to here it went up nearly 10 times. Then it collapsed back toward that range here, almost retracing, I'd say nearly 80%, and then this rise here was literally parabolic. Then as you come back, you had a drop just as bad, just as significant, retracing almost, well, if I was to put a fibs on, let me see, just to give you an example of what kind of moves this have had and why it might be very similar. Look, nearly 88.6% retracement of this particular swing. Okay, so we had that, and then we started off on this next major leg, and that leg, by all intents and purposes, started off from $1, a little short of $1, and you can see how it went up. It went up nearly 10 times. It looks 10, 13, 20 times. By the time it topped here 28 times. So it started off from 1 and it went to 28. That's 28 multiple growth. So that is very similar to Bitcoin. And anybody who was bullish on Apple at the time, in fact, if many of you know or have any background history of Apple, during this time Apple nearly went bust, and there was a question about whether Apple would ever survive. But eventually it started making these significant bullish swings, and during that time many people who got onto the bandwagon for Apple at an early stage, when they saw this, they were so bullish that they were never expected this kind of retracement ever to happen. Because of this year, they could never expect, they could never see. And remember, this one started off from 2000 low, and by the time it hit this high, that was 2007. For nearly 7 years, the price just continued going up. It had a retracement, but the retracement was relatively shallow, as you can see, relatively shallow, and the move to the upside was very, very significant. I'm talking about in terms of multiples rather than just 50% or 100% or just even doubling. This was many multiples. So you can overlay this onto Bitcoin, and I would challenge you that you will probably think that this is actually a Bitcoin chart. Personally, I think you would be forgiven to think that this is not a Bitcoin chart. Okay, you'll be almost believing it's a Bitcoin chart. So what happens after it hit this? Look at the drop. Now when you put a Fibonacci on that one, see the kind of drop you had there. Okay, so this drop must have been somewhere about 66%, I reckon. Yeah, 61.8%. Okay, so you did have that kind of drop. Then again it took off. So when this happened, you can see, those of you who don't know the Elliot wave, you don't have to, but you can see after this significant rise, you had two-step retracement. And that is a very common retracement. Look at over here. You had this massive rise, and then two-step retracement. Okay, so that is a very common kind of retracement, and of course within that you've got this kind of a complex here, but in reality the actual correction legs are this here, retracement back there, and completing here. Okay, so in that case it's a two-step correction, and most of these are like that. Most of these, whenever you look at them, see over here, you see, for example, it started off from there, so you would look at that coming up to here as 1, 2, and almost like two-step correction. Okay, so that's just the point of interest. But looking at this now, we noted that price then shot up to 20 something. It then retraced back to about 11, so that's like 61.8% retracement. And then look at it, it continued and it went up to 100. Okay, and then it dropped. So all of that seemed to suggest to me that what you have to factor in is that anybody who was going in during this time, remember, nearly 7 years of price rise, they would not have believed that Apple would ever come back to this kind of level. So that's one point to remember, and almost the fact that this Bitcoin chart that we look at resembles what Apple was doing at the time. And yet we were still having these major retracements, and the Apple was still in a long-term uptrend. So coming to here now, after this major leg up, we had another retracement, and see what kind of retracement is that. Okay, so that is more than, well, nearly 50%, I think. Let me put 50% on. Right, so that's, show what happened there. So that's a 50% retracement, and now is heading back up. So when it's heading back up, you can see it's approaching the previous high. So what is it going to do? So, well, maybe Apple has done this leg up, is come down, is making possibly another third leg up. We might get a small retracement, and we might get a final leg up. That might actually complete the 5-wave cycle to the upside. And even this downside, you can see, if I drop down to weekly chart, you'll see it's a two-step affair. Right, so over here, you can see this correction is effectively two-step affair. Leg down, leg up, and swing down, two-step affair. And then after that, we got 5-wave to the upside. So all I'm trying to show on here is that Apple have had a price history which resembles like the Bitcoin. And even during that swing, during this entire history from starting from 2000, it has had 50% retracement, 61.8% retracement, and early on we had 88.6% retracement. So all of those kind of things are possible, and Apple in the long term is still in a big bullish market to the upside. Nothing to stop from Apple maybe say topping out in this area and possibly coming back to this level, because now you can see that we've got possibly 5 wave up. Okay, so let me just show you. See, this up to here could be wave 1, this is wave 2, this is wave 3, wave 4, and wave 5. So if this is 5 wave up, then one of the things that the Elliot wave suggests, and which I know many of you might find it hard to accept, is if you look at this outline of schematic diagrams, then you see each time is sort of, you have swing up, it retraces, swing up, it retraces, but once the 5 wave up, then it retraces, or the retracement rather would be proportional to the move of this 5 wave. So once the 5 wave up, it can come down to 50%, it can come down to 61.8%, it can even come down to 80%. So that is why over here we had supposedly the move up on the first swing, which started off from here, it went up and it retraced 88%, because up to here was the first cycle completing 5 waves. So in that particular way, when Apple, for example, completes this 5 cycle up, there is nothing to stop from this Apple price share to collapse to almost like $50 from where it is now, to maybe even lower, even $30 is possible. Even coming back to 20 or 10 is not an impossibility. Theoretically, it's possible. Whether it might do that or not, that remains to be seen, but it is theoretically possible. So once you accept that the swings do happen, and even in instruments that appear to go up parabolically and seem to suggest that there is no real drawback to the point where it can ever visit the previous low, then that is a misconception. Similarly, I can show you the chart of gold. Right now on the gold, it's again very similar kind of chart, less dramatic, but still if you look at it, this chart resembles like a parabolic price rise of the Bitcoin. In the early stages, when you look at it, look at the way it went up. It started off from here at about, I think the low was at $260 or $250. Yeah, about $250. And you can see from $250, this first spike up here, it was almost like going up to 325. So that's like almost like 30-40% up in matter of couple of weeks, 30-40% up. And then subsequently it came back and retraced the bulk of that move, and then it started off this long trend. And each time you can see, while it is in that same cycle, apparently the retracements are relatively shallow. But see in here, if you contrast the retracements of this one here, same with that, same with this one and this one, you can see that these three are different from this one. So what this one suggests is that these here were intermediate term correction, whereas this one must have been a correction after a slightly larger cycle completing. So if a larger cycle was completing, then proportionately the retracement is larger, because what this will be retracing now is possibly whatever cycle that started off, whether it started off from there or it's a cycle that started off from here, for example. That's not really that important to us right now. But whenever the cycle completes, what we do notice is the retracements are proportionately larger compared with the previous one, and still in the main uptrend. There is no bearishness, the trend hasn't reversed, but the pullback is larger compared with the previous ones, simply because it's correcting a larger cycle. And then if you continue to walk it up, exactly the same way. So this cycle completed, we had this correction which is larger than this here. Likewise, when we went here at when gold was at nearly $1,000, just over $1,000, it retraced back to 61.8%. That I think was like a 50% retracement, you will see that this retracement is bigger than this one and any of these. So logically, you would reason to yourself that maybe over here, if we just put an arbitrary number, maybe over here we had a cycle complete, but that cycle must have been, for example, uh, let's call in a bracket Roman numeral 1, okay? It doesn't matter. And then this one, say for example, is a Roman numeral 2, or rather, actually to make it more realistic, say that was Roman numeral 3, and then this one here was a Roman numeral 4. So what you would then reason is that this one here is Roman numeral 5. This one here would have been Roman numeral 5. And if that was a Roman numeral 5, then it means a larger cycle completed here. And you can see correspondingly the retracement is larger. In percentage term, it might not be larger, but in terms of the actual arithmetical term, you can see it's larger. And then again we started, and once we started a new cycle, the retracements are relatively shallow, okay, until we get to the end of a next cycle up. So the next cycle up would be even a larger cycle. So whatever cycle completed here, so for example, if this was Roman numeral 5, and say if I put this one down as a number 3 in the proper number, and this one down as a 4, then what it would indicate that this here could be wave 5. So in other words, each time this cycle completes, it completes a larger cycle. So whatever started off here, this one completed a cycle that was larger than this first one. Likewise, this next cycle completed even a larger cycle, and then we started off again, and this number 4, so this one 5 is completed possibly entire cycle that started off from here. So then you would expect a much larger retracement, which is larger than this one, larger than that one, okay? And in fact, that is what we have. So the point I'm making is that even in instruments that are rising up like parabolic, they do have retracements and pullback, and the pullbacks are proportionate to whichever cycle they are completing. So if you understand that concept, you will understand why sometimes we get a new high and apparently the retracement is bigger than the previous ones. Whereas whilst in the intermediate cycle, during that particular cycle is commencing, in the intermediate terms, you get pullbacks which are relatively small and shallow. But then you get a larger pullback which is in contrast to all of this pullback here. And that suggests that maybe a large cycle completed, so we are now correcting, but we are correcting no longer these small cycles, we are correcting a much larger cycle. Okay? And just in case if many of you think that maybe gold is different from Bitcoin, I can tell you, and you can in fact go and search up the all the material and commentaries on the internet, that you will find up until this area and even up until this level here, and possibly even now I think, but certainly up to here, many people were expecting gold to go up to $3,000, $5,000, and some of them start doing calculations like inflation adjusted price of a gold, and etc. And then dollar being fiat currency and deflationary instrument, that is a dollar, and all the money being printed and Bernanke printing money, and whole usual kind of reasons people can reel off. They never expected gold to drop down here, and there are still many who are die-hard gold bug who would still expect gold to reach to 5,000, 10,000, 25,000, etc. And how do they justify it? Well, the only way they justify it is by saying inflation adjusted. So in other words, if you go back, back to the time, for example, when when gold topped out here at around $850. This is back in 1979, 1980. Okay, so I don't know whether you ever remember that, but I was observing in my early education into financial market, and I was a relatively young adult at that time. Around 1980, I saw gold rising. That, I mean, you can see, look at the parabolic nature of gold rising, right? Look at that. I mean, could you have imagined gold being here at possibly $60 or $70 or $100? And I think many of you will know that gold standard was abandoned by Nixon when gold became free floating instrument. So initially, what happened was gold prices were actually falling. Okay, so it came down to 60 or 70 or $100 maybe. And then look at the way the gold went up. So if any of you didn't know and this was not labeled, would you not have looked at this and say that's Bitcoin? I suspect you probably would have. But you see, again, on each of those cases, see, pullback were relatively shallow. Each of these, every one of them is shallow. Why? Because it was in a particular cycle. That cycle finished, and you can see each cycle finished, and in doing that, we had topping out at 870, I think it was 870, yeah, 870, and that was around about the time when Hunt Brothers also cornered the silver market. And the reason why they cornered the silver market, history will tell you, is they did not believe that the dollar is stable currency. Once the gold standard was abandoned, they knew that the dollar is depreciating in value and is going to be practically worth nothing. So they then started buying silver as a higher risk instrument compared to gold. And in fact, if you compare to gold went up from here for 100, say, to 880. So that's, say, for example, nearly 9 times. You will find that the silver went up from there to here by many multiples, a lot more than 9 times. So they cornered the silver market, and that's when gold went up like that. And then look what happened in comparison to all of these minor retracements. Look what happened. Gold collapsed from 875 to there, which is almost like 450, which is almost like 50%, and that was not the end. Many would have been forgiven to think that that was 2 step back, it's finished, now we are back in a new uptrend. You would have been forgiven to think that way. Any logical person would have thought exactly the same, because this is what happened here. And many could have gone back to this area, and they could have said, look, we had that 2 step back. Every time we had that 2 step back, see what went up. See how it went up. They could have taken this price and they could have cloned it and they could have put it up there, and they could have said, like, see, look, see here, compare that with this one. That means this leg is coming. So they could have taken that leg up, they could have put it on there, because for all intent and purposes, without being too picky, this one to me is almost similar to what you see here. I mean, people could not, without sort of being very, very meticulous and putting this under microscope, that is very similar. You had a spike high, came down, corrected into triangle, spike high, came down, corrected into triangle. So what follows, you would have been forgiven to think this is what's going to come. But look, just walk the price through and you'll know what the history says. We had that, it went back up and up here. People would have said, that's it, I am now leveraging and I'm selling my home and buying gold, etc. Right? People make some fun and joke and say, sell the children, sell the wife, bet the farm, everything, buy gold. But look what happened with the gold. Right? And this was not over by any means. This was not over. Every time, this would have rattled everybody. And in fact, if you don't know, many people during this time would have literally given up on gold completely. And I can tell you that as a resident of UK, we had a government representative, Mr. Gordon Brown, who was a chancellor at the time in charge of the UK budgetary purse. And when he took over the office, gold has been in decline for many years. And when he came to power, this is where gold was. Okay, this gold is not finished yet. Look at that. This is where gold finished. All this went on for whatever reason. I don't know why, but dollar was still inflationary. Dollar has still lost value, but nevertheless, this is where gold came. What fundamental drove gold there? I have no idea. Well, I have some idea, but in terms of our particular discussion here, it's not necessarily relevant. But one of the reasons why it happened was that inflation, while this took up, inflation was massive, and so gold was a hedge against inflation. And then during this particular time, in general, inflation started coming down rapidly over a period, and so gold lost its luster. Right? That's in my crude term, that's basically what happened. However, our Gordon Brown in UK sold gold here. In fact, he sold gold exactly there. You can go back and check the history. He sold gold there when the gold was around $260, $250. That's when he sold it. And what was his fundamental explanation for getting out of gold? Because look, any logical person doing basic technical analysis would have come up with this kind of scenario. We had the low here, gold fell below the low, and he seemed to be in such a decline. And Gordon Brown, I forget how old he was when he came to office here, but supposing, say for example, he was like 30-40-year-old. Say he was 40-year-old. Then this is in 2000. So when this 20-year happened, he would have been a young lad in a college. Okay, so you can imagine that during his adult life, his entire adult life, he's seen gold just depreciating in value. And now he's broken through the previous significant support. So he would have thought this gold is not worth anything. It's going to go down to zero, right? And how wrong he was. He sold out gold there, and he gave an explanation that gold is not an income generating asset, and we want to diversify our UK wealth. So he wanted to sell gold and buy something else. So he sold Bank of England's gold holding, right at the bottom, and he got rid of, I don't know how much. We got rid of a very big chunk, and then ever since you can see gold has gone up. I don't know whether he's ever able to go back and look at that and see how his decision impacted so many people, but you can see it went parabolic. And during this time, believe me, I have seen, just like the traders in the trading view, I have seen individuals commenting about gold, and almost to the point they become like a religious dogmatic chanting that this gold is going to go to 10,000, this gold is going to go to 25,000. But this is where we are, and so far, it appears either we have the bottom, or maybe still yet to form the bottom. No way of knowing exactly where gold is driving gold here. Dollar is still losing value, money is still being printed, everything that drove the gold during this time still in play. So why has gold dropped down to here? What fundamentals is actually causing gold to weaken to the point that it came down here? And the reason why I'm saying this is not to actually bore you with gold, but I'm using this as an instrument to say that if the Apple price share and share price rather, and similarly gold the price action have resembled what happened with Bitcoin, then you can ask yourself a question that this kind of things happen in almost any market. You can pick up any stocks, even new IPOs that go parabolic, and then they fizzle out, and then the same sort of things happen. And there are different dynamics at play, and it's really beyond my ability to try and explain in this webinar, or even fully to comprehend it myself. I'm not ashamed of saying that. There are so many different dynamics at play, and I would challenge anybody to actually say, take them on board, analyze them, put them on a piece of paper, and then explain to a novice exactly how they all interplay and what is the resolution out of all is going to be, and which way is the price going to move. I challenge anybody. I think if there were people like that, you can imagine, like the Hunt brothers cornered the silver market, they could probably corner everything that exists on the earth, everything that exists, all the wealth, all the power, everything that exists on the earth. They could corner everything if they were so effective. And the reason why they can't is because it's simply not possible, because there are so many different divergent forces at play. Just like the cycles in the ocean, you have ocean current, and many people know that there are very well established documented oceans in the current, but there are so many different cycles at play that one cannot at any one particular point say that this ocean current is going to deviate a little bit or is going to go over here. Suddenly you might get an iceberg, suddenly you might get some other obstacles, suddenly there could be a volcanic action in between, that all of these things will cause a ripple to somehow get distorted or be deviated in some way or obstructed, but eventually it's still going to maintain. Why? Because it's a bigger cycle, and it's a bigger cycle that's going to win out. So in between here, nobody knows whether really gold is finished here. When I say nobody knows, I'm talking about just purely from fundamental. Maybe some technical analysts will start taking a view. I have a view myself, but I will do it based on what I see on the price chart, and it's never guaranteed. However, you have the highest probability in your mind that you think is likely to play out, but you also have a possibility when you will review to see whether that analysis you carried out should be re-examined if you see new evidence, i.e. new evidence suggesting that you might have another low to form, and if it doesn't, price continue, then at one point you will say, well, beyond here I will have to reconsider where this gold is going. Who knows? Just like that, many years between 1980 and 2000 we had a gold do all sorts of things. Who knows, this could happen here. We could have a gold go to here, for example, and then maybe dive back here for many years. Who knows? It's really not possible. But you will say to yourself that if the gold is either bottom, it's likely to go up. There are certain areas where you would look for reaction and see how price behaves there, and then based on that you will then propagate your view to say whether it will go higher or it's likely to turn back and come down. You cannot simply look at this, look at the previous action, and simply take out that leg and plunk it here. You simply cannot do that. It's not possible. Because if anybody who did that over here, they took out this leg and put it over here, they would be talking about gold going, to somewhere in this kind of area, maybe north of 3,000-4,000. But it hasn't. It's come down, So what accounts for that? So when people are doing fractal analysis, really they need to be aware that you cannot simply take out these legs and put it on top, no matter how similar they look. Just like we said, when you have a retracement, these retracements are shallow, but then this one was bigger. So if anybody simply said, look, previously in every single cycle gold only retraced that much, so you should not have such a deep retracement, but then they would be wrong. You see, that's all I'm saying. They would be wrong. So with that kind of canvas, I can now go back to the actual Bitcoin chart. Okay, so let me see the Bitcoin chart here, this one. So following the same example, I will leave it in a log chart for the time being. Then we'll go on to the, sorry, not a log, but an arithmetic chart here. Then go into the log. So over here we had an upper price action. This looks very similar to upper price action. It's almost looking flat, but it's not flat. You and I know that. Okay, it's not flat. We suddenly have this kind of a thing, then fairly deep retracement. Then all along here we didn't have such a deep retracement. You see, most of this retracement, I know it's a weekly chart, but most of this retracement, relatively speaking, was shallow. So people can be forgiven to think that if the price did not retrace very much here or even here, then it should not retrace very much over here. But then it did. This retracement is bigger than what appears to be here. Okay, so if you, for example, now do a log chart, on the log scale, right? So say for example, if somebody goes back and let's do daily chart maybe. Okay, so if somebody goes back and puts up some kind of fibs on, you see over here, right? So over here, so first of all, we've got this first retracement. So first retracement on the leg was probably in the region of 50%, 61.8%, 78%. Okay, so it's not quite 78%, but it's a bit more than 50%, 61.8% rather. Okay, so then whenever that retracement finished, and it doesn't matter where it actually finished, we're talking about this larger swing. So if the larger swing here is finished and it started off this next one, then all in between, so this is what I'm trying to say in terms of the signature of the cycle. See, whilst if the cycle started here, then all along the way the retracements were fairly shallow. They were very, very small in comparison to how much it went up. It retraced relatively small until we hit this one here. Then we have this big massive drop. So this massive drop is so big that all of this minor retracement along the way is looking like they're just a kiddie's play when we had that. Okay, so after this parabolic move up, we have this big retracement. So you can say to yourself that whatever retracement that was must be at the end of a cycle that possibly started from here. So this cycle here carried on and it completed here. So now we have this retracement is no longer retracing just this leg. It's no longer just retracing this leg. It actually retracing whatever happened from the price from here to there. That's a complete cycle. So this cycle started off from here, say, went up to there, and we made the retracement just like we had this cycle up and then this retracement. And along the way, along this cycle, the retracements were small and shallow. Until we reach to the end, we have a deeper retracement. Then we start up a next cycle and we retrace deeper. So again, if we go back and then apply this Fibonacci ratio in that one, you can see that we retrace again more than 61.8%, not quite 78%, right? So in between, in contrast with that, in between, if you look at if you look at whatever over here, for example, so you can say that possibly say, for example, you start from here, right? Then along the way you get this spike and it comes down, it does 38%. So that is a complete cycle, retracing 38%. Whereas in between, it's not a complete cycle. See, this leg correction here is actually a correction of this minor cycle, right? And then you can see it's come down 38%. Then likewise, this next one is a correction of this leg here, again 38 to 50%. So you'll find that when we get correction, these corrections are proportionate to whatever cycle they are correcting, whichever leg they are correcting. But then when you get a larger correction, that generally means it's an end of a slightly larger cycle. Okay, so we continue with that particular philosophy, and you can see that whatever started off here, we never had such a deep retracement until we hit this. And this retracement now is bigger in size compared with any of these here. That means that whatever this is correcting a larger cycle than any of these previous one. So just like the gold and the Apple chart, it would be wrong for somebody to say, we had this spike low, so you simply take this leg out and plunk it on here and basically try to give the appearance that this is going to continue like that. Okay, because we know it never did anything like that. Instead we had this leg here. Before doing this, it had this leg here. Now many of them have said this one is exactly the same as that leg. So again, they would go back and they would pick this leg up and they would apply it on here to take it up. But then when you do, you will find apparently This one is around 10. This one is 25 times almost. So if you put 25 times from here, you would be way above the top, but it never did that. So why didn't you do that? Why is it that this one went up 25 times, whereas from here, which is nearly 45, if you multiply 45 and keep it to 50 times 25, I mean, where would that be? You know, maybe north of where we are. So why did we stop there, and why is it now that we are appearing to have a much deeper, a much drawn out and much larger correction? This one didn't take us long. Why is that we are taking so long from here? If you look at the actual price chart on a measurement, if you look at this one, and I don't know why people would say did it correct here, it only took 7 bars. But even if you don't and say it went up to here, is 90 bars. So really speaking, from here, 90 bars. You see, we went much beyond 90 bars. And in fact, there were people who, when we were saying this, they were saying this about 88 bars, this one is 82 bars. So really, correction ended here, right? And it's like a double bottom, correct, ended here. But really, we did not. We only went up there and we dropped even deeper, and we are still seeming to really lack the momentum of what we saw over here, right? So all I'm trying to say is that it is wrong just to go back and simply say this looks like that, so we're going to take this leg and we're going to apply it on here, because if you do, then what do you get? You should have had move going up from there like that, and instead we didn't. We came down here and we're still within basically a congestion range. Nothing much has changed really. So I think when people say that technical analysis work on a Bitcoin, I would say yes, it does, and it's not always what it seems at appearance. I.e., just like for the fundamental of whatever drove the price of Apple to there. Likewise, whatever fundamental that drove the price from 850 top in 1980 to 250 down here, and then from all the way back up to here, this 2011 high, whatever fundamental drove there, apparently those fundamentals haven't disappeared. The i.e. the dollar reducing in value, Fed government, pumping in money. In fact, all major governments around the world are trying to devalue their own currency. that. So why is it that gold, instead of continuing perpetually, has that? So this is the natural correction at the end of each cycle. So if you accept that, then you will also understand why, despite the fact that this Bitcoin appears to be in a very long-term big bullish move to the upside, it will still along the way have some proportionate, both in time and proportionate both in terms of dimension, correct cycles along the way. And those cycles will continue to appear as prices continue. And technical analysis would work, fundamentals will work, but there will be time when, whilst the larger fundamental is still driving the price of an instrument, in a shorter term, just like the ocean current that we mentioned, could, for some reason, cause this kind of obstruction in the price growth. So you get a correction. This simply doesn't mean the fundamental has changed. Now, many people would go back and say, oh, this drop happened because of the China, whatever did this, and then this drop happened because Mt. Gox went out of business, and then this one happened because something else, such and such kind of a thing. Those could be true, and they will be possible, important events along the way. And those important events along the way, they're like a big iceberg, and it's possibly that those things have somehow obstructed the price progression. For how long and for exactly in what time, what magnitude, that would be difficult to gauge. And sometimes you might get events after events, and that could make price progression very difficult and maybe even engender some degree of negative mood. But it happens, and that in a larger way has not taken away from possibly a larger fundamental. The other point that many were talking about is this one that we've partly covered, is that harmonizing fundamental and Metcalfe's law. We've covered quite a bit on the fundamental and this Metcalfe law, which I don't personally understand, but I think in terms of summary, a sort of a novice like me might say or summarize it by saying that many of the experts on the Metcalfe law seem to think that because the rate of adoption increases, the prices increases. But remember, it's not uniform. It's not a simple straight line. Metcalfe law, just like many other laws, you have a Newton's law, you have 3 laws of motions in Newton. Things like if something is in a motion, it will continue until something changes the direction, causes it to change. Likewise, if there is an action, there is equal and opposite reaction. We've seen that here, that we have this action, we have opposite and equal reaction. At several degrees, they would be proportionate. So we see all of that, but all of these laws are not so rigid that it does not allow for this normal breathing and normal cycles repeating. So, if nothing else at all, I think no matter how bullish you are, no matter where you think this Bitcoin is going, and no matter what understanding of infrastructure of Bitcoin you might have, but you should still remember that none of those laws are so rigid that it does not allow this natural ups and down cycle within a larger trend. And some of them will be so shocking that you will find it difficult. You'll have to stand aside, scratch your head, and even wonder what's going on. And it's not because anything has changed. It's not because fundamentals have changed. It's not necessarily because somebody's done something. Everything that is causing the price to move may still be intact, but within that you will have cycles, and at the end of each cycle completing, you will get proportionate retracement both in time and in magnitude, and these will be dependent on which cycle they're completing. So for example, when you had this cycle here, it might only be completing retracement for this one. In fact, I can tell you it was this one here retraced to there. Then we had this completing. So whatever completing here might actually be a cycle that started off from here. It might be just completing this cycle, or it might be completing slightly larger cycle, right? Which cycle is it exactly completing? Well, you go to then start identifying where it is, and the only way I know how to analyze these cycles is by putting this scale on a logarithmic scale like we've done here, log scale, and then simply channeling it. That's the best way I can do. So for example, when we are looking at this particular chart, if I was to actually take it into weekly, it might be a little bit easier, or even 3-day chart as a happy medium. So I can tell you that we've got, for example, that parallel line I'm looking for. Okay, so whatever started off here, I think this here is possibly one cycle. Maybe I should have started off that one from here, or let me start again. Okay, so this is the way to draw it. Okay, so whatever went on, once that trend line was broken, then I think that particular cycle we could conclude ended. So where did it actually end? So maybe if you fiddle about with this one long enough, you'll probably realize that this one probably only corrected whatever move started off from here. It went up parabolic and it corrected that. So once it broke that one, then really speaking, we got to make sure that we consider a different cycle. So this is another thing I'm going to show you. So okay, I won't do the channel, but let me just do the trend line as a general means of identifying a particular trend. So whilst we were above that particular trend line, we had one cycle. Once with that broken, then you've got to start off by maybe a first trend line drawn from this base here, picking up these possible lows here. So whilst we remain above that particular trend line, we are in whatever cycle that starts here, still intact. And within that, we had several cycles. We had this cycle, we had this one, we had this one here, then we've had this one here. So whatever cycles there are, each time they break, they are ending. And then those who are inclined to consider, exponential growth and never ever, coming back to the last bubble, top being broken and all this kind of thing, that may only be relevant because we are still developing a larger cycle. Once we develop a larger cycle based on Elliot wave, which I alluded to over here, where we get relatively small retracement because these retracements are only correcting the last leg up. But once that 5-wave move is up, then we get a deeper retracement. And that deeper retracement can take out the previous bubble top, like it did here. It can take out even previous significant low. The reason for that is because if I draw the sketch of here, say for example we had wave 1, wave 2, wave 3 for example, wave 4 and wave 5, if that was a 5-wave move up, then what you would do in general is you would draw a trend line supporting those 5 waves, okay, like that. So once those 5-wave move is up, then while this one was coming down only correcting this leg, this retracement was only correcting this leg, now we got 5-wave to the upside. So that 5-wave completes this entire cycle, okay. So let me change the color of that, and then I'll try and explain to you why on the price chart. So if that was a one complete cycle, just like this one was correcting, and that correction was proportional to this one, likewise this correction was proportional to that one. Now we got a one complete cycle. Now what would happen is you get a retracement that is proportionate to the entire move up, right? And this first retracement can be 50%, 61.8%, or 38%. So we said here, but it's possible that on a first cycle we could even have a situation where you get a cycle up, and then the retracement is very deep. Remember, like in a gold, and Apple, we had nearly 88% retracement, right? So you can imagine that during this leg up, there would have been bubbles along the way, just like the bubbles along here. And then whenever that cycle completed, we had 88% retracement, it broke all the previous bubble tops. Why? Because that cycle completed. So over here, people might find that during this price history, we never broke down below the previous bubble. So that's correct. And reason why is because we are still developing this cycle. And this cycle is completing different legs, but is not over yet. Okay? But the point you should remember is that we had this move going up. So supposing somebody put up what you call exponential growth on this leg. So we know that failed. It failed over here. So what happened then is we could not maintain this momentum. So when we had to slant this, so this one dropped out, and we had next one going up. Whether you do it there or there, I don't know, wherever, doesn't matter. Say you do it here, right? Actually, what I'll do is I will put this one down here. Okay, so for example here, right? So once this trend was broken, we had then that became the first part of the second cycle, because we are still above this. So the line dropped, the slant became less steep compared with that, but we're still in a bullish uptrend. So over here we broke below. So really speaking, the cycle didn't start from here, cycle actually started from there, right? So what I have to do is this, hence the pink line, okay? Hence the pink line. So, but whatever started from here, that cycle is broken now. So this pink line is currently still acting as a cycle starting off from here, okay? And the larger cycle, you know, it started off from there because this is the base, this is the baseline. This baseline, I'm going to make it into brown. That's the massive cycle up. We're still in an uptrend, so we haven't come back to retest that. But currently, you can see if this was a spike low and you have this here is almost like people say hanging on with his teeth. You know, it's just trying to maintain that. Now some will go back and they will fiddle with this line so much that it might say maybe we are still in. But then I think this price action is given up. It's already breached technically. But I will accept maybe some degree of tolerance. So, you know, we'll assume that it's still hanging on to that pink line and it's not given up yet. However, if that breaks, then just like this one was broken, this one was broken, then what happens? It comes down and it comes down to the next possible line. So who knows where the next possible line is going to be? Is it going to be from there to here? Or is it going to be all the way back to here? Now, I have no idea. I personally think it's going to come back to here, but I really cannot tell you where. Just like nobody else can tell you exactly whether this is, well, there will be some who will make an attempt to tell you, but whether they will prove right or wrong, that will only time will tell. They're telling you this is going to go to here. There are many individuals who are doing that. But whether the price will go up there or not, I have no idea. It could do, providing it stays above this line. If it breaks that line, then it's going to come back down somewhere to form a next possible support. Where is that support going to be? And it's no point trying to draw it from here, right? It's no point trying to drawing it from there, because you can see here we had a breach, and then this particular thing is really not on, because that's like trying to draw trend line from, people they drew trend line from here, you know, because that's not where the cycle started. So you can't draw this cycle here, whatever you see there did not start from here. So that's why you can't draw this trend line in. So really speaking, that cycle started off from here, and this cycle was a part of this one. So maybe we started off this cycle, so possibly this is like wave 1, you know, minor. This here is like minor wave 1, minor wave 2, minor wave 3, minor wave 4 here, and this is minor wave 5. So that large 5 wave actually could have completed a cycle from there. And hence, so if that was a larger cycle, so hence you've got a situation where both we are correcting deeper, right? We're correcting deeper, and we are taking longer because it's correcting all the move that started from here to there. Now I'm not entirely sure, because of this kind of spikes, whether it started from there or from here. My perception is that's where it actually started from. So in terms of, you know, proportionate, remember opposite unequal reaction, and proportionate what you call retracement. So if, for example, move started off from there, or even from here, but I think more likely from here, then you're talking about, on this three-day price chart, it took 157 bars. So in that kind of proportion, you would expect a proportionate retracement. So that proportionate retracement means that if I just, let me do it the other way, from here to there, it took 156 bars, right? So from the top coming so far, we've already done 76 bars. So that's approximate mathematics saying 50%. But it's quite possible that in terms of time, we might actually do if the 50% doesn't hold, then Fibonacci relationship tells you that we'll be doing 61.8%. So what does that bring us to? 61.8%. So say for example here we do what was it, 156 bars, or is saying 468 days. Okay, so equals 468 days times 61.8%. So that means we could correct for nearly 300 days, right? Well, you know, that's not really out of now our figment of imagination, because we've already corrected from the high. We have already corrected 224 days. So what is to stop this one correcting for nearly 290 days? So where does that 290 days come to? 290 days up to here. 290 days up to there. Now that in terms of time it will be proportionate, but remember it's got to be proportionate in terms of distance, right? So in terms of a distance, you know, if this is not satisfied already, unless we really pick up our momentum from there, you know, to the point where over the next few days, not weeks, this is 3-day bar and we've already done 50%. So not only a few days, but really within the next few days, this weekend finishing Monday, Tuesday, this price has got to shoot up like it did over here. If it does not shoot up, then I think everything is telling me we are going to now take longer time to correct, i.e. 290 days. Where does the 290 days come? Up to here. And if the price doesn't go up, and it can do all sorts of things, it can do any manner of things. So let me just put a vertical line. I'm being very fair. You know, you'll see that I'm not dismissing any ideas. I'm not being just biased one way and just drumming my own drum. You know, just standard straight, and I've not involved any Elliot Wave yet. I'm just taking standard Fibonacci relationship both in terms of time and distance. Okay, so if the price continues to correct up to here, so it can do any manner of things. It can go straight up, and if there is any chance of doing that, it needs to do it very quickly, because we are now actually, look, as far as I'm concerned, we are now almost risking reaching that line. Okay, but even if you assume that line is still held and the price recovers, then it could become very, very bullish, but it needs to do that very quickly. It cannot dither over the next few days and try and, you know, blink its eyes and trying to think what it should do. It can't do that. It's running out of time. Okay, that's one observation. The other thing it can do is possibly just meander like that, right? It can meander like that. Now, can it do that? Well, it can. It's possible, but in terms of the Elliott wave structure, it suggests it can't do that anymore, because it's taken so long to do what it did over here, and it hasn't established a final low. So hence that final low needs to be retested in order to form the low. The reason why I'm saying that is because in Elliott wave we have this particular schematic diagram, okay, which I show you. This one is a double zigzag. I'll come to that in a moment. This one is a kind of a flat, but it's called expanded flat, and it's not on the card yet, but it could be, but it's not on the card yet. But this is the one I'm calling running flat. So let me just quickly explain what running flat is, okay, and contrast it with a normal flat. So normally we saw in Apple, in gold, and in many other, even in Bitcoin, we saw that we can have a move up, then we normally get step down, retracement, another step down. That completes the correction. So we can then start off with a new cycle up here. Okay, so that's a normal zigzag. Normal zigzag, we call that one A. For example, we call this one B, and we call this one C. So we call these ABC zigzag, right? So that one would be just a normal ABC zigzag. In fact, I'll call it ABC zigzag. That would have finished the correction. We could have started off. So that's one possibility. right? Now the next possibility, and this often happens, is where we get, let me change the color of that one to show that it's a different pattern we are looking at now. Say make this one green. So we have a leg up just like here, and instead of getting this, we get a flat correction, which is like that. That's called flat. And then price rocket up. Okay, so you get like a double bottom. So again, it's a zigzag. It's A, B, and C. Still ABC zigzag, but it's flat. So this one here is a zigzag. This one is flat. And the reason why it's called flat, as you know, tops and bottoms are similar. Okay. Now the variation of this flat is what we call a running flat, which is currently what I think we are forming. And the running flat takes place like this. Okay, in magenta. So we had the same leg going up. Then what we get is we get a retracement, then a retracement like that. Sorry, let me start again. So here we have ABC down here, for example. So what we get there is we get a running flat where this one should come up to here. It does not. Let me just clarify. On the running flat, what happens is within this one, you should have wave like that. Okay. Okay, so we should have in this B section, we should have retracing up to either 50% or 61.8%, then another leg down. But this retracement, this wave B, you get ABC zigzag to the upside where this top finishes higher than here. Okay, so that's the point I'm trying to make. So if I call this one W, for example, in magenta, W, X, and Y. Okay, so in this W, X, and Y, Y finishes up above wave W. And apparently what we got is we are trying to retrace wave B, just like over here, over there, with a view of coming down and forming the next leg. Okay, just like here to correct. But during this leg, we should get ABC like that. But instead, what we are getting is what sorry, didn't happen. Okay, what we are getting is we've had a bounce. So in other words, where the November high was in Bitcoin, we dropped from there, we came down in December low, then we went up in January high. Okay, so that January high, when it's finished, we should have had, really speaking, a move like this, move like that, just like over here, to set the scene for this next leg to drop. But instead, make it a bit more realistic, like that. But instead, this leg didn't go above this one. Instead, what it is doing is actually like that. So in other words, instead of going up to above the high of this, instead of coming up to here, up to there, this one is so weak that it is not going to go above this high, and it's going to drop down. So this high is a January high. Okay, so let me go back to the actual chart now. So looking at this chart here, we've had this move down as a wave A, this moved down as a wave A, then we went in a wave B. So wave B color should be, make that one, okay. So we should have gone up like that. We should have gone up wave A up to here, say for example. We should have come down and we should have headed higher. That's what we should have had, right? So then that would have completed ABC. We could have then dropped down to form the next leg to correspond with this pattern. But it didn't. What it did is this one dropped below this one here. And therefore, the whole pattern is shifting now to the point where instead of going above this high, we are struggling with this one, and it's going to struggle, and probably we might take out this high here, which we just made in June. Might take out that high, you know, if it gets to 680, for example, or even if it gets to 710 or 720. So it could take out that high, but in reality, it is struggling against whatever momentum, you know, is there, is not strong enough to take out these previous highs and head higher. So as we've seen already, we are looking like very vulnerable of breaking below this uptrend line, which held this spike, came down, held this spike, but now we are saddling the trend line. So if you're going to saddle the trend line and it doesn't pick up momentum to the upside very quickly over the next couple of days, then chances are we are going to head back down. And when we head back down, we'll be looking for completing this leg, this one here. And where is it going to come? Well, it's difficult to know where it's going to come. It could come down back to this brown line. Now in the brown line, if it dropped straight down here, then it could come down to, you know, anywhere like 130, 120, could come down anywhere like that. Okay, but if it didn't, and if it did maybe like a normal wave, which I am expecting, which is 5-wave motion. So in this particular section, what I'm expecting is a 5-wave move to the downside. Once we get a top around 680 or 720, wherever that top is, we're going to get 5-wave move like this here, something like that. So whether it happened there or whether that 5-wave move actually happens with this one slanting a bit more like that, maybe only come down to 250, I couldn't tell you. But because this is a 5-wave, is going to be impulsive, and therefore the momentum of that will be very steep in comparison to what we've seen here. So it is quite possible we can get this kind of steepness, and that's why, you know, by the time the price catches up to the uptrend line, we could be heading toward 200. But at the moment, I'm not going to jump the gun and say that's where we're coming. At the moment, all I want is the low here retested. And if it means that it doesn't hold, and it's for the very first time it's coming to take out the previous bubble high, understand that that's nothing wrong. There is nothing unusual about that, because we have completed a larger cycle. And in a larger cycle, based on this Elliott wave pattern we saw here, where after the 5-wave up, it does take out the high of previous bubble. So there is nothing unusual about that. Now, this is my idea, and that is why in this chart I'm suggesting that we are losing momentum. We will be heading down. If you look at the weekly chart, many people, this one is a daily chart, but look at on a daily chart, look at the RSI where we are. If we, for example, came down and did this, you know, it is A, B, C as it were, and we formed the bottom, and we've started going up, then look at this drop on the RSI. And there are some individuals who might perhaps begin to say that, look, you know, we've had similar things here in the past, just like the price action. You know, we've had low here, price went up there like that. You know, we had this little congestion here, price went up. So we had that little congestion here, so really we should be rocketing up. Well, I agree, we should be rocketing up. But then why isn't the price rocketing up? Why is price apparently struggling here, right? Why is it struggling? I mean, you know, think through the logic. If there is such a big fundamental and momentum, then each leg, it forms high, should be stronger and should be steeper. Okay, just like we saw here. You know, look, we've had this leg up was strong, this one here was strong, and the steepness, if you look at it, is similar. You know, so let's not beat around the bush. You know, if you, I mean, on this one, it probably won't show you because on the log chart, the slant of the line change, but you can see visually, you can see the steepness of that, right? Look, this steepness here is actually less steep than this one, and this one here is more or less similar to that one. So he's suggesting that there is a momentum. But if you find that this steepness here is steeper than this one, then it means that on this leg the momentum is less than it was here. And apparently I think that's what we got. So if you look at the first one here, yeah, if you look at the first one here, I didn't want to mess up my main chart. Sorry, this one here. So if you look at this rise here, and this is not on logs here. Yeah, it is on logs. Let me just change it. Okay. So for example here, if you look at it now, you see, look at the steepness of that. Okay. Now if you try and place it on here, based on that steepness, we should have completed this here by that date. You know, so we should have, whatever we made a top here on 1st of June, but really that top should have been around about 15th or 16th, you know, of May. We should have had a top by here, for example, but we didn't. We had a top over here. So in other words, to travel the same sort of distance, almost same distance, because if you put this Fibonacci, you can see the leg of that is once long. This one is just fractionally longer, right? 1 to 1 would have been at 635, and we went up to 680, right? But that was, even if you count the fact that, you know, it demands a couple of days, 2-3 days extra. But in terms of steepness, we should have completed it by 15th of May, or maybe even if you allow for the fact that we went up a little bit higher, we should have completed it by 20th of May. So why did we spend up till about end of May and, you know, beginning of June? Why did we take extra 10 days to get there? Is because the steepness of that is less than what we had here. And then if you look at this one, see, so if you start doing this time symmetry kind of analysis on the chart, you will see that from here to there it took 25 days. Okay, so if you start looking, if this was the low and we started from here, 25 days, we've already spent 27 days, right? And we've not actually taken out even this high. So why is that? Why is it that we have somehow a problem where the price is not traveling further, even though it's taking longer time? Why? My perception is that we don't have the momentum. And the reason why we don't have the momentum is because of what I'm expecting, what I'm trying to explain on the chart. What I'm explaining on the chart is that, you know, we've had a leg down here, which is like a normal leg. We had a bounce here, which is fine, but then this one should not have come this far. It should have stopped here, should have gone, made a new high, and then we should have dropped down to here, and that would have been fine. That would have completed the Elliot Wave correction, and we could have headed higher. Then the low would have been in place. But the fact we didn't do that, we didn't go up here, we didn't take out the high, and we dropped here. We tried to bounce back, but we didn't make it. We came here, but now this leg is really lacking the momentum. It's lacking the momentum of even the bounce of this one. So that means that it's not going to go above this high. That's another reason why I think we are going to fail at 680 to 720. Another reason why we should be failing, and we should be then basically going down, because this is the running flat. Running flat is in the section that I try to explain, which, you know, over here is that this wave B goes above, it goes higher, and then we come down for the zigzag. But in doing that, we've got zigzag up. So here in a zigzag, we done January high, we came down, and this actually made a new low here. That's a problem. We made a new low, and hence this one is going up, but it can't go up above the previous high, so it's going to fail. It's going to fail here. It's going to come back and at least retest that low as a minimum. That's why this is skewed to the downside. And because it's skewed to the downside, that means it's very bearish. If the correction can't correct normally, like this normal correction, and we are skewed to the downside, that means it's very bearish. So I would not be surprised if we actually come back and hit this brown line as a very conservative, expectation. If, however, we break that and we actually plump really low, we come down like, instead of this 5-way move here, we do something like wave 1 down, wave 2 up, wave 3 down, wave 4 up, and wave 5 down. And yes, I know you might think, you're going off your rockers. I know. I would fully understand that. But if we did this kind of a thing, then understand that we have finished. All this here was a part of the cycle that was dominated by this brown line. So if the brown line does not hold, then we are actually completing a much bigger cycle, and hence we are going to head much lower down. But if the brown line holds here, then possibly we would be heading up like the way I have identified on my longer term chart, which is where is it, my weekly chart, this chart here. Okay, so on this weekly chart, I'm expecting that brown line to hold and head higher. But once we complete that is when I think the larger cycle will complete. Whatever started off from that line is currently still in motion, and none of these waves are absolutely set on stone, but I'm using my best endeavor to put these waves in right perspective. So I think we have this pink wave 1 in parentheses, pink wave 2 in parentheses, and then I think this high we see in November is a pink wave 3 is because of this here, 1, 2, 3, 4, and 5. That's a 5-wave cycle. So we are now completing whatever started off from here, and that's why this dotted line, which currently we are hanging on, is going to give way, and we will come back to this baseline. So once we come back to this baseline, that will complete this wave 4 in parentheses possibly and head higher. That heading higher, we don't want to run too far ahead, but heading higher means that we could either go and retest the November high, or we could fail slightly short. So we could have 3 possibilities. We could go and take out November high. Let me change that one to different color. Okay, so that will be one possibility, is go back and retest November high. And this is purely based on Elliot wave, not on fundamentals, not on ecosystem. I don't understand it. I don't think I ever will. So I won't even try. But you lots who understand, you'll know whatever it is that you feel will drive the price there. So I will be with you there. So once we get this low, we could go back and Elliot wave guidelines say we could make up a retest of that. We could make a new high, and we could make a failure. Failure simply means that we don't go right up to the top, and I can show you where that failure is. 5-wave failure is this one. Is you get wave 1, wave 2, wave 3. So if this was November high, become complete wave 4, we could find that the price is so weak it can't go and retest even wave 3. So we could actually stop short. So we could go back up to up to something like a, well, I don't know, it could be anywhere. So somewhere about 1,000, maybe 1,050, but somehow stay short of the spike high we had in November. So we could fail here. So we got 3 possibilities. We could either have an equal high, we could have, and let's put them in this order, so then they are in numerical order. So we could make it so that it's a failure. We could make it so that it is retest of the high, or we can make it so that it goes next higher. But once that wave is complete, this wave pink I've got in parentheses 5, which completes a larger wave 3, because I don't know what the price history was over here, but I'm assuming that maybe we had a big cycle which came up like that. Okay, so this massive wave 1 finished, we had a wave 2 retracement, so we are now completing wave 3. So then the longer term would be coming back down to wave 4. That wave 4 will be the bracket wave 4, this one here. So we'll be talking about that one becoming wave 4, and then wave 5 to the top over here. Wave 5 to the top. Okay, so when we get, until if these trend lines are accurate and if they are correct for that particular cycle, and we hold this low, we go up, then as long as that particular trend line continues to hold, we will be part of that same cycle. Okay, we will be part of that same cycle. So we could come down here, complete this wave 4, and then head higher wave 5, and then next time we would break. Next time when we break, we'll get something like A, B, and C, and who knows where that will be. Because what it will do, it will complete the entire 5-wave cycle, and then Elliot Wave suggests that it can come down and retrace 50%, 61.8%, or even 80%, or even 90%. It's possible. Whether it will or not, I mean, that's not material, but theoretically it's possible. So whether time will tell whether it ever gets there. But for the time being, the focus now is none of these here. This is all academic, and whatever infrastructure, whatever ecosystem, whatever fundamentals, whatever ETFs going to be launched, whatever anything you can care to name, any Metcalfe laws, whatever mathematics you throw out, anything that I don't comprehend, it doesn't matter. All of that is academic. And what counts, even if you try and pick up these prices and you stick it on here and say, oh, it's going to go up there, you can do that, but it's all academic. What will show is whether we are able to get momentum from here over the next day or two, because we are on a borrowed time now. If we fail to do that momentum to the upside, then rest assured we are coming back to retest 340 low. And once we complete that low and it's finished, then we will go up. We will definitely go up, and the minimum expectation is at least to retest the November high, possibly to make a new high, and then again have a massive correction. And this will be part of a normal cycle. Now, maybe many of you don't know, but at the moment, this is a weekly chart, and you can see what we are seeing here. Over there, for example, in contrast with what we are seeing on a MACD now, see over here, we had a MACD, go up, come back down, and it sort of bounce on the zero line. Over here, we went a massive up, so the drop of a MACD from there almost back to the zero line is unusual. It's unusual because over here, we dropped to zero line, but it was never that high. But here we went so high, we dropped down to zero line. And now you can see what we are doing on a MACD. We are really not picking up momentum. This is just basically turning. So unless we get an explosion in price over the next few days, like I'm saying, like that, the MACD is not going to pick up. So what MACD is going to do is going to flatten out. And in fact, even if you look at the histogram, I think you will agree with me that a histogram is actually showing that we've got reduced momentum. Let me put a line up there. Right. So if you look at here, the histogram, the current histogram, is actually lower than the previous one. So maybe you might say, well, the week is not over yet. Well, it's true, And it's possible that if the week is not over, maybe this will pick up and maybe it will go up. But all I'm trying to say is, why over here, if the momentum is up, why are we struggling? Why is the histogram just flattening out? Is it suggesting something? Is it suggesting that maybe what will happen is the price will weaken and this will curl back down? And in which case the histogram will start coming back down. Could it? Well, if you look at the RSI in same way, look at what RSI is suggesting. You know, look at the RSI. RSI with this high here, with this high here, we made a high back in June, 1st of June, we made that high. We came down and we are now not very far off from that. You know, we're only like a $40 away. But look at what RSI is suggesting here. So again, for this RSI to change, the only thing this could change to such a bullish outlook is for price to really rocket up. It cannot, no, rest assured, it cannot do this and just pause for the next 3-4 days or a week or two and expect this explosion to start off. It can't do that, because if it doesn't, and if this one still makes up to say 680 or maybe take out to 700, then you potentially you'll have a higher high on the price, but more likely on the RSI you'll get potential divergence. That potential divergence is bearish, confirmed by what we are seeing, weakness on the MACD, and also that that's not all. But look, I mean, you know, when are we ever going to even tackle that RSI? You know, if this was a trend line, down trend line, this RSI is nowhere near getting there, nowhere near. So are we, for example, going to get something like this? You know, like that? Well, time will tell. I think we probably might. Time will tell. But you know, I would not certainly. I mean, individual analysts can obviously believe what they want to believe, and it's their money, it's their view, and I'm not saying I'm right. I can be completely wrong, as you know, I have been. And in fact, I'll show you one chart which I have been wrong on. This one I published, I have been wrong on, but why am I wrong on this one? So that you take it into context, and maybe you know you will also ask yourself the same question. There was one individual who picked on this chart and said, look, Elliot Wave was saying going down there. Well, Elliot Wave was not saying the price was going to go down there. So that individual was taking this chart out of context. There was no guarantee Elliot was going down there. Okay, just like, for example, when you see a picture, what would be the quickest way of showing you a picture? Well, I mean, I think you'll understand. Say for example, let me try and show you on something here. Okay, so this is the chart of a Euro USD. It doesn't matter. Okay, but the point I'm making on here is, say for example, you're beginning to see this pattern here. So what is this pattern, do you think to yourself? Well, for the time being, it's basically gone horizontal from here to there. Okay, it's gone horizontal. And then as the price reveals itself, you begin to see something else happening. So at the moment, all one could think is this is some kind of congestion zone. So if you were drawing a trend line, you'll probably draw a trend line like that, right? That's just a common trend line. Okay, so you draw a trend line like this, and you will probably say apply it on here, right? But if that point was here, this is what you're seeing. This is what you're seeing. So in your mind's eye, you say, okay, you've got potential uptrend. So in that potential uptrend, price came down, bounced off this low here, going back up. So you expect logically either to break out of this upper resistance or possibly come back down. So in your mind's eye, you begin to see that. Okay, or it's coming down. So you begin to see that. But how far will it come down? Will it come down all the way to there, or will it you know, sort of rest part way? Well, you don't know. But as you see each price coming down, you say, okay, this is coming right back down. Okay, so now you made a guess. So on this particular day, you thought this is almost so close, it's going to come right down. Well, it tried to go back up, then it spiked down. So when it started going back up here, you begin to think to yourself, is it failing? Well, it didn't fail. It actually came down. So now your next thing is, okay, they made a spike, so it's going to go up. So in your mind's eye, this is strong move up. So you're going to continue to go up and it's going to retest the high. So you begin to see a picture reveal. Well, at the moment, we don't know what it's going to do because the price stopped here. So what I'm trying to explain is that when you see partial move, you begin to think to yourself, what is this? Is this, for example, actually, let me show you a better example. Right? Let me show you this example here. So this is the chart of a US dollar, Japanese yen. Okay. So when, for example, we began to see this here, what will people begin to think? Okay, we can draw this trend line down here, and possibly we can draw a trend line down here. So what is it? What is it now? Now, anybody know if the price was here? Anybody know that you'd be jumping to your conclusion and saying this is a triangle? Okay, so in other words, you see a certain pattern and you begin to think to yourself, which is a common technical analysis, not Elliot Wave, is saying it's a triangle. But who is to know if that triangle will actually develop into a triangle? Who is to know if that triangle will actually not turn into something different? For example, who is to say that that triangle will not turn into something like, something like that? Who is to say that this price is going to hold and it's going to go retest that and it's not going to jump down? But actually, it did turn into a triangle. Okay, so you begin to see a certain pattern, so you jump to certain conclusion, right? And that is the whole nature of technical analysis. Technical analysis is not with a hindsight. Technical analysis is what you're seeing. How do you anticipate? Because you now want to plan a trade. So your trade would be such that you might say to yourself, okay, it's narrowing. So within that narrowing, maybe it's too high a risk to enter. Maybe your strategy would be is that you want to see a trend line break, to consider either going long or short. Whichever way it breaks, that's the way you're going to go for the trading. So you will continue to see, okay, it stopped. It never broke the upside. So is it now going to break to the downside? And you begin to see, no, it didn't. So it's narrowing. So which way is going to break? So eventually, you'll see a break up. At that bar, it broke up. So you would have said to yourself, now when the price was here, when the price were at that level, you'd be saying that if the trend line breaks, then the price above that would suggest that we have now got higher high. I'm going to go long on that with a stop maybe above the low. Okay, so your trade would have developed, right? Your trade would have developed, and you would have had some way of managing that. And if you were a longer term trader, you would have had a stop below low here, for example. Maybe this would have taken you out. Maybe you would have still been in, or this might have caused you confusion. Why? Because out of the triangle, you expect a strong break to the upside. And for some reason, it didn't. It stopped here. So, you be now trying to second guess. You'll be trying to think to yourself, well, why it should be a strong break? It should be stronger than here. So why did it follow through? Why did it start coming back down? Why did it fall back into the range? Is it because the trend is now to the downside? Well, how would anybody know? How would, besides, the common trend lines, horizontal support resistance, many forms of different indicators, there's no magic formula. And I don't care what technical analysis anybody follows, and some special, algorithms and whatever else they've got, they cannot at this stage now say, if this was going to shoot up, why did it fail? Why did it come back all the way back to almost the beginning? And in fact, it's still correct. Look where it went up, right? So, it can do that sort of thing. So your expectation of this triangle was not wrong. However, price didn't actually go in the path that you indicated. So you had this, and for some reason, instead of going all the way, it actually made a retracement before it continued higher. So going back to my example, I was expecting that if this was going to be a low, then based on Elliot Wave, we would have had 3 legs to the downside. And Elliot Wave have also what is called like a falling wedge. So if this one developed, then maybe the low would have been established over here, around about 300. Okay, we came down, we did 340. So maybe we could have come back to 340, we could have come back to 300 or 320, and that would have satisfied. Everything would have worked. Why? Because the Fibonacci ratio would have worked there. I've given you calculation of Fibonacci ratios there, so everything would have suggested that if price dropped to here, that could have been a significant low, and we would have headed up. But instead, what did the price do? Price came here, and I was expecting it to drop, and that was just like the common thing where you've got this developing, and I'm beginning to see, okay, we go zigzag down, so I'm expecting a third zigzag, but the third zigzag actually never developed. It stopped here, and everybody knows now that price headed up. So for somebody to pick this up and criticize my means of analysis is like speaking from a hindsight. Okay, and anybody can do that. Anybody, and opinions are penny a dozen. So anybody can do that. If they were able to put a picture when I posted this chart, if anybody was able to put a picture at the same time here and give me the reason why this would fail and we are heading up, then I would have said, okay, fine, let's see how the price will develop. And in fact, there was no lack of individual telling me that we bottomed here, we are heading up. It never happened. There were same time many individuals saying we are bottom here, we are heading up. So likewise, there are many individuals saying this is the final bottom, we are heading up. Well, fine, let's price prove that. Well, at the moment they might be saying, well, they have, because the price has gone up, it's come down, didn't retrace very much, but it's now making higher high. I agree, but like I explained, the momentum on this leg was strong than the momentum we have on the second leg. So that is almost like the picture I was showing you here, is where we've got some problem here. We've got out of the triangle, we were expecting a strong break, that didn't happen. We then had a deep retracement. So could we have something unexpected? Could we have a possibility of, let me clear all of this now, clear everything so we get a bit clearer picture. Remove all drawings. Okay, so coming back to this bear chart here, if we were expecting basically a price to continue higher from here, then no matter what indicators you put on, no matter what algorithm you come up with, the critical part is two-pronged. The first one, right? The first one is that literally we are hanging on a trend line. That's a fact number one. The fact number two, and if I take this one down to even daily chart, okay, I don't know that I've got the bottom one absolutely right. I haven't. So let me adjust that a bit. Okay, so this one is acceptable there. And this one is now there. So this one now you can see we didn't quite come to the trend line, but we are now bumped. We've bumped, give and take a little bit. Be generous. Give and take a little bit. We've bumped here. We've come back and bumped a second time. And it is quite possible that we may, for example, like I'm expecting, and again, expecting doesn't mean that I will be wrong if the price doesn't get to 680, for example. Because what are my larger term picture that I am trying to convey, and which will probably stand many of you in good stead, despite your bias and prejudice, is that if the price, for example, fell like that, then at least you won't be caught on the wrong side. If you are long, you'll have a means of managing that and making sure that should this price don't do what you are expecting, then at least you will not end up trapped on the wrong side or give away all your profit. Okay. And secondly, if the price doesn't do what you're expecting, then maybe price will do something different. Then could it be that a lot of people are expecting price to rocket up, nearly, I don't know how many, but if I was to take a poll among the Bitcoin community and all those who understand the higher intelligence and reasoning and algorithms and infrastructure and ecosystem and all these other words you can coin together, who understand more than I do, If the price doesn't do this, then it means price will do something different. So, no matter what it is, at the end of the day, it is dollar in your pocket that counts, not what the price is going to do. I don't really care at the end of the day whether my analysis is correct or my Elliot Wave count is correct or Elliot Wave works or not. It doesn't matter. Really does not matter at the end. What matters is if the price will get back to 1,000 and 1,200 and higher, or whether the price is going to fail and is going to take out 340 low. That's the question everybody should be asking now at this moment in time. So, for anybody to judge that, I will even narrow it down to this. I'll say that's a wrong drawing tool. It should be horizontal line there and horizontal line at the top. So as an absolute minimum, okay, absolute minimum, it needs to stay above 600 as it were, and it needs to quickly take out 800 and 680, but ideally it needs to take out 680 there. That's what it needs to do. And if it does not, and it hangs around long enough here, then you know what's happening. The longer you hang in this area, the risk increases of it actually dropping down. That's where the risk increases. If any of you are long, and if this price heads up, there's no risk, okay? But your risk is not missing the market because you're already long. So you should not have any fear about me calling this market dropping down to 340. You should have no risk whatever. Why? Because you're long. But in order to mitigate that risk, should the market not go up but it drops down, you will have to have some kind of a logical stop loss. So where would you have a logical stop loss? For the time being, you might say, okay, I'll have a logical stop loss at 550, which is just below this low here. But that's fine. That's what many people would do. Or you might say to yourself that, really we are hanging onto the air on this trend line. So I don't want the price to close below this low at 600. If I get, a price closing below that, and some people might have a rules like, 2-day closing. But 2-day closing, the problem with that one would be is that is a 2-day closing. How would you know what the 2-day closing will be? Because you could get 2 candles. 2-day close could be like that. That could be one day close. Okay, next day close. This is Bitcoin, remember? Next day close could be like this. So you're not going to wait until 2-day close below the trend line. You will say to yourself that you'll have a trigger. That no matter what happens, no matter how bullish you appear, if the price drops below 550, something is real amiss with this. We have potential resistance, potential support, should turn into support, but if the price drops below 50, something is wrong with this chart. And who is to say it's not going to drop down to 500 or 600 or lower rather 400, right? Nobody can say that. So I wouldn't even go by saying 2-day close below this chart, below the trend line. On this one, and look at each day. Sometimes look at the move on a day. You can't be that generous for this Bitcoin. Bitcoin is a killer in my view. If you look for 2 days, 2 days could probably wipe out $200-300. So you can't be that generous. So your generosity on this Bitcoin is that as a worst case scenario, if it drops below 550, you really got to go back to drawing board rather, and reconsider where this Bitcoin is going. Don't let yourself bleed to death or to the point where your account is completely wiped out. No matter how bullish, no matter how fundamental is saying everything, because it's not the fundamental and it's not the stories. What counts is $1 in your pocket and in your account at the end of the day, right? And if it stays up, then fine. What have you lost? You lost nothing at all. But on the other side, if the price begins to drop below and it shows serious weakness, we've already assessed the price is weak already. So if price is weak already and it does not do what it's supposed to do, then it means it's going to go down, and it's not going to stop just here by coming down. It's not going to just stop here. Remember, this is like a dam. You have a dam, you have all the bullish sentiment over here. You got somehow people got short or get caught on the bullish side. All of these people are trapped, and many of these people who are trapped here, they'll still be trapped. And even people who might call this is a massive whale, strong whale, massive long strong whale could still be holding out here on, and maybe hanging on to this trend line, right? If this one is broken, that could be like a dam. All of this dam could be emptied, and if it emptied, you don't know where it's going to stop. You have no idea. You got no idea whatsoever. Believe me, if this trend line broke, you have no idea whether it's going to come down to here. I mean, they may have bounces on the way. It's not going to be one straight line down, but you have no idea whether it should stop here. You have stopped here. There is no formula. There is no magic. Nothing going to tell you. You might go down, put a Fibonacci retracement. You can put down trend lines. You can put down anything you want. I can guarantee you will not be able to tell me a figure where you think this low is going to stop. Whether this spike low could be a potential a support zone. It's a logical area where you could expect a lot of support in that area, 80, but you have no idea whether the price is going to stop there or not. You'll wait for it to drop and see what it does. Okay, so on this daily chart, I see nothing real bullishness on a short-term basis. Longer term, yeah, but short term there is no bullishness. You look at daily RSI. We looked at the weekly one, which was showing serious weakness. You look at the daily RSI, and you see what is happening on a daily RSI. We had a high here in November. We had high here, and it's suggesting the same thing to me. To me, this drop on the RSI is so strong, even though the price didn't drop that much. Now people might be saying, well, that's probably because his RSI is reloading. Well, I certainly hope it's reloading, because it doesn't have a lot of time to reload. It's got that. Let that one break, and we are in a problem already. In fact, I'll be a bit more generous, and I'll do it from one of these lesser line, maybe something like that. And then the common 50 line, which is not a magic line. It's just a general line where momentum could be deemed as going up or down based on where it is. And you can see just like the price is hanging on that uptrend line, the RSI is possibly, one could say, is hanging on just there. And if it doesn't take out this high on RSI, even if the price does, then price is just done this. It's confirmed bearish divergence in already a weak market. So you know where that's coming. So anyway, that's my reason why I think, not counting Elliot Wave. Okay, this is just simply looking at momentum, trend support lines, all of that. Now there was the question why this particular chart that one analyst has posted, and he is looking like this big wave 1, big wave 2. That's fine so far, but this wave 3, 4, and 5 is, in my view, completely wrong. And the reason why it's wrong, one of the reasons is, see this one here, he said wave A, wave B, and wave C. You never see 3 wave for wave 5. We should have 5 wave for wave 5, not 3 wave, not 3 swing, not swing 1, 2, and 3. We don't have that. We should have 5 wave to the upside. And because we don't have a 5 wave to the upside, his labeling of A, B, C is wrong. Likewise, possibly his labeling of this wave 3, 4, and 5 is wrong. And not possibly, but it's definitely wrong, because he's got some kind of a MACD indicator here, and the highest MACD indicator lines up with this one. And Elliot Wave guidelines suggest that on a wave 3 we must have the highest momentum. So this is the highest momentum. So if this is the highest momentum on the momentum, then that should be some kind of a wave 3, not wave 5, which for him, he's saying 1, 2, 3, 4, and 5. So the entire cycle is now complete. So potentially, based on this chart, we could retrace 80% potentially. That means we could drop down to 10. So I don't really know why he's got this blue line going here, because it bears no resemblance to his 5-wave analysis. His 5-wave analysis, this blue line should be starting from the bottom here, from where wave 2 is, like I did on my chart, right? Then you can find that this wave 4, if it is genuinely wave 4, will fall in a rising uptrend line. But he knows on his chart he's already failed. That's why he's putting this one as a 4. He's trying to fit in with his expectation, but it's not following any guidelines on Elliot Wave. This 3 swing never happens. Only place where you see 3 swings is in a particular area. And you have seen me show that before, but I will show it here again quickly to show that sometimes people post Elliot Wave charts and there are Elliot Wave analysts, but not necessarily all of them have a good grasp on the Elliot Wave. So these are, that particular one, I say he's got a serious flaw on his interpretation of Elliot Wave. I'm not saying that I have a correct Elliot Wave understanding. I too could be wrong, but this one is definitely wrong because it breaches all guideline. All guidelines been breached in this one. The only way this could be correct in what he is saying is in one particular circumstance. This is, you get a megaphone pattern like that. Okay, I've exaggerated it, but it's a megaphone pattern, and there is possible for you to get 3 swings. So you can get wave, and I'll change the color on that one so you'll see what I mean. Okay, so this is the only place where you could get 3 swing to wave 1, for example. You get 3 swing back, then you get 3 swing 3. Actually, it's going to be more like that. Okay, more like that. So you could get that like that. So you can see there are now 3 swings. Okay, this is the only kind of pattern where you would see these kind of 3 swings. So he has said that this one is a big wave 1. This one here is a wave 2 according to him. I'm assuming. This he's saying is a wave 3. This is 4. And this one is saying is 5. Okay, so if that is the case, this can happen only in a particular area. Where does it happen? At the end of the wave. So in other words, we would see that happening in this area here. Big cycle 1, and I'll change the color on that one to contrast it, so we get like this here. So it's a big cycle 1. You get wave 2, wave 3, wave 4, and wave 5. Now in this 5th wave, you could see potential megaphone pattern developing like this. Okay. So that megaphone pattern happens in a 5th wave. That's an ending wave, last wave. Okay, so you get wave 1. So you get wave 1, for example. 1, 2, 3, 4, and 5 over here somewhere. And there you can, this one, you can have this kind of pattern here. So this one is called 3, 3, 3, 3, 3 pattern. It's a megaphone pattern. And likewise, also you can get in this particular area, you can get the other alternative, which is more common, and that is a rising wedge pattern. right? And in this rising wedge pattern, you can also get exactly the same configuration. You can get exactly the same configuration where you get this kind of 3-3-3-3 swing, uh, and essentially you get big wave 1, wave 2, wave 3 smaller, wave 4, and wave 5 finishing like that. Okay, so that, but this kind of pattern, either a megaphone pattern or rising wedge pattern, happens in the ending section. So this kind happens in an ending wave 5, or it can happen in wave C, wave C. So what I mean by wave C is, for example, if you get wave A, wave B, wave C. So in this wave C, you can have this pattern, or you can have this megaphone pattern, or it happens in a wave 5 on the way upside. If it is on a downside, then likewise, you'll get a falling wedge pattern. You get megaphone pattern reversed to the downside, and you'll get, it's happening in a wave C or wave 5, and that is why he is wrong. Secondly, if you just cross-check the logic of what is done, remember the highest momentum you see is in wave 3. So, for example, in this one, we've got a larger wave 3 finishing here that I've put in a bracket. Larger wave 3 on my other chart. Okay, and then I've said this one was 3. This here is 4, and that one is 5, making a larger wave 3. And you can see on the RSI that we've got strongest momentum. Okay, strongest momentum is on this one. Why is it on that one? Because it is a wave 3. So this, in fact, this leg would be the strongest leg. It's a wave 3 of 3. So this is a big cycle wave 3 going up, starting from here, big cycle wave 3. Within that, we've got wave 3. So this must be the strongest one. That's why you got RSI hitting the highest reading at wave 3. And then subsequently, you've got this would be wave 5 of this cycle wave 3. So this one here would be wave 5. And that conforms with what Elliot Wave guidelines suggest, is that between the wave 5 and wave 3, there should be divergence. Okay, so we've seen that divergence here. We've seen that divergence there. So that to me tells me that labeling them the way that I have done is correct. And second thing is that now we've got this here is continuing to diverge. So until we take it out, we are continuing to diverge, and it may well be that on a longer term cycle, what might happen is that we may actually come down, make a low, then we will start going up, but we will probably struggle to take that kind of reading up there, like 97, right? 97 on the previous one, 95 on this one will struggle. And certainly, even if you make an equal high on a wave, on a daily chart, on a weekly chart, you'll definitely find that you will not get any challenge. If I can get to weekly chart, this one here, wrong. Where's my weekly chart? Okay, this weekly chart here. No, this one, weekly chart here. See, on a weekly chart where we are, we've got the same kind of divergence between wave 3 and wave 5. So we will probably find that when we actually make a low and go up to retest November high, we might find that RSI will not get anywhere near 97 reading on a weekly chart. Something to look out for. But hopefully you understand where I'm coming from, why we are expecting a retest of 340 low as a minimum expectation, and possibly even coming down lower than that. Now I will do, time is getting on, so I don't want to bore you, but I will drop down to smaller time frame. Let me let me just go down to say 4-hour chart, and I am getting repeatedly asked, why is this not a low? Why am I insisting that this is not a low? This is not a low. You know, repeatedly, so many times, so many different individuals keep asking me why this 340 is not the low. Why is Elliott wave not now showing 5-wave move to the upside? And many people, many analysts have already tried to do that. They've already tried to label this. Now remember, some of those, they probably won't have the understanding of Elliott wave. Uh, Probably, I'm not saying they don't, probably they won't, right? So they're saying this is number one, and blue because it's bullish. This is number two. Oh, number two. This one number three, and this one number four. Change it in a second, and we are now going up for number five. Okay, so many of them will actually be doing that. Too many. Three. And why isn't it like that? Now it's possible, you know. I mean, it might look reasonable, and people might think, well, that is a 5-wave up. We are expecting 4. We should be going up for 5, so we have a bottom. But you know, just like the previous example where I said the ending. Remember here, I was showing you. Maybe I have to move far out. Yeah, I have to move too far out. Anyway, you know the rising wedge pattern I was showing you. We can only one place where we get this, where we get a rising wedge pattern. Two places, in fact. Right? Two places. So I will actually, what I will do is I'll actually draw two different. That could be one rising wedge, and this could be another rising wedge. Okay, now Elliott waves guides you into which one of these is bullish and which one of these is bearish. And what I mean by that is, so let me explain that in a second. Okay, so here now we have two rising wedges, but the outcome of these is completely different from each other. So if we have this as a rising wedge, which is what appears to be happening now, I mean, for example, all intents and purposes, if I was to draw this line, you can see that it is narrowing here. So without sort of, you know, agonizing and getting microscope out, basically this is wider section than that. You know, even if I was to draw a trend line from here, for example, you can see that this is getting narrower than that. So it's definitely some kind of a rising wedge. And what kind of a rising wedge could it be? So there are two kinds of rising wedge. One of them starts off like this, like that. Okay, so let me just redraw this one a little bit. To make it a bit more realistic. Okay, so this one I'll change that color, and then this one here, change it to this color. Okay, so this is one rising wedge, right? And this could be the other one. The difference between them is massive in terms of their construction and in terms of their outcome. Okay, this one, if I was to say is bullish, if that was a bullish, this one could be bearish. Okay, and the composition is such. Right, so composition could be change the color of that to say a blue color. This would be the composition. Is this wave here that we just started? We started from here. The bullish one has every swing as 5 wave up, like that. Similarly, five wave up. Okay, so you see what I'm getting at. You get 5 wave up like that. So that would be bullish. Why? Because every single bullish leg has 5 waves in it to conform to Elliot wave. Whereas in contrast with that, this one being bearish, and bearish should really be in red. So this one being bearish doesn't have that. It doesn't have to have that, right? This is the bearish, and it can happen only in 2 places, as you already know. It happens in a wave 5 or a wave C. So that means it's wave 5 or wave C. In other words, it's a final leg. Okay, it's a final leg. So either of these can happen in wave 5 or wave C, but this one can also happen in a wave 1. Bullish in wave 1. So that's the difference. The difference is that this one with the 5 waves, even though it's a rising wedge, is bullish, and it can happen in 2 places. This kind of wedges can happen in 2 places. It can happen in wave 5 or a wave C, and also in wave 1. Also in wave 1, right? So, and the resolution of this would be is that this one gets retracement like that, and then heads up. That's why this is bullish. In contrast with that, this one doesn't have that. Construction of this one is very different. It has, instead of a 5 wave, it's got 3 wave. Every leg is consistent of 3 leg, right? It doesn't have 5 wave like that. So this is bearish, and this one happens only in 2 places. Where can it happen? There. Wave 5 or a wave C. So where are we here? Are we in a wave 5 or a wave C? Well, if this was the low and we started counting from here, then it's logical that this is the first part. So the first part, it can't be wave 1. It can never be wave 1, because so far you can see, if you look at each leg, if you don't know the Elliot wave, it's even easier. This one is 3 swing affair. Look, 3 swings, right? Then you look at this other one, is 3 swings. It's not five wave, it's 3 swings. And even this last one we are looking at, essentially, is 3 swings. And we're expecting this one to take us up to here to complete that 3 swings, maybe like 680 or something. To complete that, we may even find that unless we get a momentum to take us all the way to here, which is what we could expect, because it's still rising wedge, and it will go to the top end of the rising wedge before dropping down here like that to complete this wave 5. But it's possible that this might be so weak, it may never even get that far. It may actually give up over here, 680 maybe. It will just give up there and collapse. But that would still be rising wedge. That would still be wave 1, 2, 3, 4, and 5. But it will be like here, truncated wave 5. But then because it's a three-wave swing, is this construction. And that construction happens in two places, wave C or a wave 5. We have already ruled out this being wave 5 because it's only started from 340. So this cannot be wave 5. This 5 would have happened if we had a long sustained uptrend from the bottom, but we did not. We cycle started from 340. So this is the wave C. Because of these three swings, it's an ending wave. So the ending wave, how would it come about? That is here. So I think the only reason why it come about is there. Let me go back to daily. Right? The only reason why it's gone up there because it's the ending wave. So what is it ending? So it's ending what I've been trying to describe. I've been describing this section here as a larger wave A. So that is a big massive wave A. Then what we should have had is we should have had A, B, C like that. But instead what we got is we got wave A up, that's fine. Because it's retracing up, so we got it in blue. Then we should have come down here. We should have gone up to complete this before dropping. We did not. Instead, we came down here. We actually made a lower low compared with this wave A. We came down there, and now we are trying to go up, but we are very, very weak. So what this means is, in terms of the labels, this is the big capital A. Then we should have this ABC. You should have ABC, but what we've got is we've got wave A, wave B here, and this one is wave C. So based on the pattern we are seeing and based on the construction, that is what it's appearing. Now that doesn't mean to say it will actually turn out like that. But remember, like I was saying on the previous example over here, in a picture you see certain things, you begin to anticipate certain things, and you begin to then contemplate what is likely to develop. Then in exactly the same way, this is what I'm anticipating. I'm anticipating we had a wave A, then we got A, B, and C is called running flat because this is so twisted to the downside. This wave B should not have come below this wave A. It should have been higher. It should have been over here. And then this wave C should have gone higher above. This wave C should have gone higher above this A, but it didn't. It's actually struggling here. So that is telling me already that we are really, really weak. And if we are so weak, then chances are it's going to disappoint people who are really bullish to the upside. And it is more likely to fall to the downside. So in terms of the litmus test, what we need for a litmus test is price dropping actually to conclude, to definitely prove beyond shadow of doubt that something else is in the offing. You know, if we drop below the 550, then something else in the offing, not what everybody is expecting. If we breach this one and we continue higher, then remember this is already a falling rising wedge, so it can't go much higher. You know, if you look at it, if you look at this leg and that leg, this one cannot now go as much as that, because you know the most it can do is possibly do an overshoot above, for example, and then drop. But the outcome still bearish because it's a rising wedge, because it's got three-wave construction, and this three-wave construction only come in either wave 5 or wave C. So if this is wave C, I can't spell. If that was wave C, then if that's wave C, then it means we should have a resolution to the downside. So those are my reasons why I am not convinced that this is the low. And the fact everything else since then is telling me that most likely this is not the low, because everything else after that doesn't support a bullish view. If we had a bullish rising wedge, and in which case we would have had normal retracement, for example, and shooting up like that, then the construction of these swings should have been more like the one in magenta. This leg should have been 5-wave in. We don't have that 5-wave. Likewise, this one should have 5-wave in. We don't have 5-wave. So it is giving me impression that this is what we got. So that's why we are looking to move down. So in terms of concluding this, I hope you've gathered why my 340 low needs to be retested, why anybody can be wrong. The most important part of this is to not suffer beyond sustainable damage whereby your trading career ends. Okay, and I would not necessarily be married to any one particular direction to the point where I would get into a denial form. Many have said to me, what will make you reconsider whether we are really now in a not an uptrend? There is another element of correction which I said to you, for example, on this schematic diagram here. We could have, instead of a normal flat, we could get an expanded flat, like the megaphone pattern I just showed you. We could get an expanded flat where we do go above. So where B can go above where A started. So in this case, if that was to happen, what we would see is wave B, this wave B, like A and then wave B, we would have gone high up there above this high, and we would have then dropped. So that would have been what they call expanded flat. It's expanded because the wave B gone above the high of the origin of wave A, and then when we come back down, wave C come below the origin of wave A. Sorry, origin of wave B. So in other words, in this expanding scenario, we would have had wave A, this would have been wave B, and this would have been wave C. Now at the moment, we can discount that. We can discount that because of the price action we've seen here. Up until we've seen this price up to this low, this one could have been a possibility, because for that possibility we could have had a very strong up leg where many of you would have really made fun of me, maybe thinking that this is now a new bullish trend because we've taken out November high, so what am I talking about? So that would have been still possibility. However, this is now, I think, dismissed, and is dismissed on the basis of what we have seen in this area. So now this is my expectation. So based on that expectation is what I would do as far as I'm concerned for my trading, and regardless of whether people want to accept that or not is up to them. Whether I am proved completely wrong, that is not necessarily a shameful thing, because you see a pattern, you see a picture, and before the whole picture is revealed, you make a guess, and it's based on the guess. Your guess is not to make yourself a fool. Your guess is on the basis that it's a most likely outlook, and based on that you'll commit your money to trade, and so I think anybody else in the technical analysis world would do the same, and anybody else in the fundamental will probably do the same, because regardless of how strong everything seems, if the price does not confirm what your belief is, then you have to ask yourself a question that could something else be a play? Even if the larger term picture will hold, is it possible that in a shorter term some other dynamics is in the play whereby what you are expecting is not developing? So anyway, that's where I think I will end. I'd like to see if there are any questions or any comments. If any of you want to post anything in there, let me just make sure I've got a updated chat, because it might have frozen on the other one. and I will be happy to go over any comments before I conclude. Okay, so I can see Low Rife is posting a chart there. And what was that chart actually? Is talking about gold. Yeah, okay, that's fine. Well, as far as the gold is concerned, ignore all the labels here. And the only way I can do, yeah, let me clear the drawings. Okay, the only way I can make sense of this is by changing this one to log scale, because it's difficult to actually put trend lines on price that is doing something which sometimes is a bit difficult for an eye to try and comprehend. Okay, this is what I'm thinking, and here is my reasons. Remember, as far as I was saying, that if the trend line holds, so remember up till here, we were in a whatever cycle that started off here, we're still in that cycle. Okay, but now it's clear that cycle is broken. Okay, that cycle is broken from there. So that's very clear. Nobody needs any special, imagination to understand that that cycle is now broken. So my understanding is this, that this is what we've got. We've got first leg up here. Let me make a little bit thicker on that one. And in fact, the Bitcoin, I think, is in exactly the same situation. I've showed you a chart. I'll in fact comment on that in a second. So I think what we got is we got wave 1, we got wave 2, and then whatever cycle started here, is all this is part of the same cycle, because it's the same trend line that held true all the way. Okay, so this is part of the same cycle. Then that cycle is now complete, and that's why we have now broken through that trend line. So you can see already this one is a big wave 1, this one is a big wave 2, this one is a big wave 3, and this one is a big wave 4. Now this is not with a hindsight. You can go back and look at my charts on the trading view that I have actually posted ever since we had a wave 3, where a lot of the people were arguing against me and were suggesting that this low 1500 is going to hold. I have posted several charts and shared several charts, just like the Bitcoin charts, that we are going to, at least when we had this high, that was not part of a new trend. I explained and gave comments why we would break, at least come back and retest 1500, which is exactly what I'm saying with a Bitcoin will come back and retest 340. But chances are we could actually break well below, and I was saying that possibly not only 1500, we might even drop down to 1400. And then subsequently, when 1400 was taken out, I then gave a target of around about 1200. Okay, so far we have held. So what I'm saying is this is part of a wave 3, and this is on a weekly chart. Let me just show you something on a MACD. Okay, right. See the highest momentum on a MACD, it ties up with wave 3. So on a wave 3, that's high. What we are doing is retracing in wave 4. And then the common thing on a wave 4 is that the MACD will drop below the 0 line. So what we've got on a Bitcoin, this is on a weekly chart, but on a Bitcoin, you'll see that what we've got is we got this initial drop on a MACD. We've had this little bounce, but the bounce is so weak at the moment, and it's looking like we're going to do this, right? So be prepared for it. That is what gold chart is telling me. So if you're talking about fractal, then don't try and place price of a instrument of thinking that this is a triangle. So we had a triangle over here, so put a projection on there. Don't do that. That is not going to really work. That will mislead you. But in terms of cross-market analysis, what is happening with gold on a weekly chart is happening exactly with a Bitcoin, I think, and only time will tell that. But see with the MACD being the highest on wave 3, then we've got wave 4. So what we should be having now, technically, what we should be having now is we should be having retest of the low we had here. Possibly MACD will form a higher low and head higher. So that is what should be expected on gold, meaning that maybe this one here are two possibilities. Either is a possible triangle like that, and in which case we are expecting a failure around 1360, 1365, and we could drop. That would really make sense, because this would be then coming downward. We would be looking at possible something like this. So this would be a larger wave A. This one is a larger wave B, and then this one is a larger wave C. And in that larger wave C, we've got 5 waves. We've got wave 1, wave 2, wave 2. This one is wave 3. This is 4, and this one is 5, which is what we need to see with the Bitcoin, and we've not got that. Okay, so this is the wave 5. Now people might say, well, how did you make that wave 5? Well, basically this is the way I've done it. And you'll see this is not hindsight. This is the chart that I posted in my trading view on gold several, back in, I think, February 2013. That was the only part that I have been confused about is over here, and whether we have the low or not. But the MACD is telling me we don't have the low. MACD is telling me that now what happens on a wave 4. So if you consider 1, 2, 3, 4, and 5, then what happens on a wave 4 is the MACD come back to 0 line to kiss it, then fall back down, and subsequently price will either retest the low or make a new low. We would then effectively form a higher low on the MACD to give you that divergence to set the scene for the next leg up. So gold, I'm still expecting it to drop back toward at least 1200, but probably come back and retest the 1180 or even make a new low, okay, for gold. So in fact, even in the most recent chart that I published, I tried. Sometimes the waves are not clear, sometimes you to agonize on it, and I think this was wave 1, this was 2, this was 3 here, 4 and 5. Okay, that was one possibility, but really speaking, with what's happening so far, it is now highly likely that this is not a 5-wave up, it's more like ABC up. And in a triangle, that's what you get. You get 3 leg up, 3 leg down, 3 leg up, 3 leg down, and again we are now making a 3 leg up. So we would say, for example, this is leg up, retracement, another leg up, and that would complete the triangle. We should then see gold sell off, really sell off, and it will be very strong. And in which case then I would be 100% almost convinced that we will get a low in the 1180, 1150, 1150 area also. And in fact 1150 has been, and maybe even 1100. For a long time I've been saying that that's where the low is going to form. And until then, everything else is a noise. It's not really it's not really confirming any bullishness just yet, but it will come. So thank you for asking that question. You're suggesting is a possible triangle, which is true. I was also going to say that in the Bitcoin, let me just clear all of this. Bitcoin is doing exactly what gold has already done. So that could be another. We're talking about intermarket analysis, okay? So beside the MACD, where MACD is bouncing, Bitcoin MACD is bouncing, but it's bouncing very weak, and chances are we're going to get this second leg down, okay? As far as the gold is concerned, then you see what we got over here is this kind of a messy That is what we've got on Bitcoin so far. We are trying to make this bounce, but this bounce in Bitcoin is so weak that is not actually going to go up to here. It's only going to rise up to there, right? And then, like the gold soul of Bitcoin is going to sell off. So that's what I see on that one. One final chart which I wanted to just comment on, and you've seen this before, so it's nothing new. It is a correlation chart. If I can get to it, this one here. Okay. Now many people have said to me that, you know, this is Bitcoin, this is not your stock, this is not this, this is not that, you know, and I understand that, and I think maybe all I can think of is that those individuals who dismiss this correlation either are not taking it seriously, or they are almost into like a what I call dogmatically making statement that either are not fully considered or are misconceived, okay, or they are so bullishly biased that no matter whatever you say or show, it will not make registration with them. They will not accept it. It's almost like in a point of denial, I think. But the point I'm going to make is this: we don't have a lot of price data on a Bitcoin on this particular chart Bitstamp, but say for example we take it off from here, right? The only thing to take note of here is not which one is moving by how much. That's not the point of analysis of core market analysis. The main structure on correlation analysis is this: you've got S&P 500 on the bottom, Bitcoin on the top. So when they both bottom together, this is where the S&P 500 bottom together, or rather bottom. And I think personally, Bitcoin also bottom there. So you see on a Bitcoin, you've got some kind of a triangle here. And I think what it was is really beginning of the move actually started there. Beginning of the move did not start at this spike low here. And there is a reason for that. There is an Elliot Wave reason why actually Bitcoin move started from there. But the point is, both on the S&P 500 and Bitcoin, we got a move up, we got a move up. Then we got a spike on Bitcoin. Whereas on the S&P 500, we also had a high. You can't say this is coincidence. You can't say this is, you know, coincidence. Is not related in some way. See here, we had an intermediate top, so we had a spike in the Bitcoin on a weekly chart. Then we had that drop down, so we had this little sideways congestion on the S&P 500. Okay, this sideways congestion S&P 500 didn't do that. Yeah, okay. So sideways congestion S&P 500. Then we had another poke up on S&P 500. So we did similar. We did a little poke up, not to the point where it took out the previous high of the spike here over here, but it made a little leg higher. So we had a little leg higher. Then Bitcoin retrace. So we had S&P 500 retrace. S&P 500 made a low. Bitcoin made a low just there. So it was 2 weeks early. Bitcoin made a low 2 weeks early. S&P 500 made a low 2 weeks later, but not too far apart. Then they both started going up. So generally speaking, without sort of going into each individual swing, we continued higher until we made another spike here. So what happened there is S&P 500 also made an intermediate high. Then S&P 500 congested for a couple of weeks. Then it made a new high, but Bitcoin congested in a triangle form. So really, you know, if you look at this part, there was the S&P 500 continued to make higher high, but in general term, got a wrong tool there. What I should have is this one. So S&P 500, whereas this went into a triangle, S&P 500 went into, I think I'm picking up a wrong tool. This one here. S&P 500 went into horizontal range. So, it didn't do anything different. This one was in a triangle congestion. This one is almost like horizontal range. Then we found on this particular day when S&P 500 actually sort of bottomed and it was congesting, then the Bitcoin started picking up speed and went into this here. Well, S&P 500 carried on following, then Bitcoin topped in November. S&P 500 went into a sideways range whilst we had this congestion here. Then we made a low at the same time on S&P 500 and Bitcoin. Bitcoin is now making what we know to be a rising wedge, which is a bearish resolution. But whatever comes out of it is a bearish resolution. So is that bearishness is going to now come back to the point where it hits this low line, which I think it will. What's going to happen to S&P 500 is going to drop also possibly to lower line. Exactly where, I don't know. Maybe it's 1800 or we might come at 1800, and then what's going to happen possibly is this. We could find this one makes a new run to retest the all-time high as a larger wave 5. This one can come and make a lower high, and then Bitcoin can drop and S&P 500 could drop. So that's basically what I think is likely going to develop. But for the time being, we have a major divergence. We've got lower high potential in the Bitcoin, but we've got higher high on the S&P 500, and I think Bitcoin is leading the major market. Dynamics might be different. There may be different driving forces, but what the way I think the reason why there is so much similarity, almost to the point of within a week or two, is because this is an expression of people willing to take risk in order to make return. Somebody said to me, they don't want to take risk, they have to take risk because the central governments are flooding the market with the cheap dollar. Well, maybe that is so, but I think really that's a misconception. People will always take risk if they think they can improve their value or their advantage or whatever. They will take risk. It will have nothing to do with the dollar. If the dollar was very strong, people will still want to multiply dollar. So they'll still take a risk and try and see if they can multiply dollar. So it's misconception to say simply because their deflation on a dollar and central banks are flooding the market with the dollar. That's a misconception. But the reason why this shows similarity is because individuals are willing to take a risk when they think they can make a gain. So if this is an expression of a risk, then I think the Bitcoin is on a supercharged risk instrument, almost on steroid, amplifying whatever you see on the S&P 500. Is by comparison, this is very tamed, this is very hyperactive instrument. So whatever they do, but they do it together. If the risk taking is expressed in one, you'll see the risk expression in the other also either synchronize or follow soon after. So the value of this one will be twofold. One is that I am expecting potential ending of the market movement to the upside, even if it is an intermediate top, and that lines up with the Bitcoin doing this bearish wedge that I explained to you in detail. That means they are both lining up, and if they're both lining up, then ideally they are confirming each other that they are likely to be going into a bear mode. And which one will lead first, I have no idea. Previously it was a Bitcoin leading, so maybe Bitcoin will lead again, or maybe they will both be in sync, like sometimes they both put low together the same week, so maybe they will both do that together. On a weekly chart it would appear, but maybe on a daily chart you'll find that Bitcoin possibly put a low or high rather, maybe early, and the market will put a high later, or market is already topped this week, Bitcoin will top next week. and then if they begin to confirm each other, then please uh, don't dismiss it. Whatever you do is your business, but please don't dismiss it. Don't take it as wacko. Don't take it as non-correlated. It's a nonsense. You don't understand. Don't take it like that, because the consequence of it could be so painful that it's really not worth it. No matter market, whatever market does, it's not worth your reputation. Is not worth your hard-earned money. You trade the market not to be proved right. You trade the market to make sure that you make money with manageable risk. I think that's my view. So I thank you for your indulgence with me. Thank you for your time. Hope you find this useful. Apologies if that's gone on for very long, very long. In fact, I should stop doing these very long sessions. But I enjoy doing them. I hope I have given you value and real background, maybe something that you can use to plan your trades weeks and months ahead, and possibly ones where you are no longer scalping for $10 and $50, although that is your preference, but maybe look for capturing some bigger swings that may be few $100s and maybe more. So finally, I'll do one final check on the chat and see if there is any more comment on the chat. If not, then I really will need to conclude here. I think otherwise, um, I think you will all be okay. Any more comments before I conclude? Any more comments? Anybody? Okay, well, there's no other comments, so I'll conclude here. Thank you very much. Please do interact with me in the trading view. Um, let me know what you think. I'll be more than happy to entertain your questions and maybe elaborate, as time go by and new data unfolds. But in the meantime, thank you and hope that you've learned a lot and appreciate your time with me. So